Good evening. This is Tom Alexander. It is Tuesday, July 16th. It is about, what time is it? It is about 7:20 p.m. Eastern time in beautiful Charleston, South Carolina. This is a special midweek update. The stock market is doing some things that it has not done for over a year that I think are absolutely critical. And I want to discuss some of these. Now, these are things that I've been talking about for several weeks. If you go to my website, alexandertrading.com, as a matter of fact, let me just show you that now so you can see it. And what we'll have here, all right, here's the website, okay? alexandertrading.com. Click on weekly update. Now, this particular update is not going to be posted here. It's actually, well, I'm going to post the video here, but if you go to the weekly update, you can see the past weekend updates that I've done going back many, many months, and you can follow the progression up to where we are now. I've been discussing what we're seeing now and the possibility that it might occur and its importance for many weeks. So let's just delve into that. Oh, by the way, this Thursday, I am doing a webinar with my good friend, Ben Lichtenstein of formerly TD Ameritrade, now the Schwab Network. Ben and I have known each other for many, many, many years. Ben has an extraordinary depth and breadth of trading experience, and we're buddies, and we've known each other for years and years. And we're going to do a webinar and discuss trading in general, and we'll certainly be talking about the stock market. Now, if you want to do this, it's free, but you have to register. I'll put the link below in this video, okay? And you can go to this, I'll post the link here under the weekend update. This will say special stock market update. You'll be able to get it there. Okay, so let's talk about what we're seeing here. I'm going to start with the Russell. Now, this is a weekly chart of the Russell, and the Russell has exploded higher over the past couple of weeks. It's breaking out of a balance area here. And again, I'm not going to show you market profile charts tonight. I'm going to keep this relatively brief. But if you'll go to the website and you look at past weekend updates, I have charts in there that will show on a more granular level this thing as it coiled up over the past few weeks, but it has exploded higher. Now, there's something else. There are a number of takeaways from this chart. First of all, this is reflective of the broader market broadening out, the entire U.S. stock market. It's not for months, if not over a year, we've been driven by 6 or 7 stocks. The NDX and SPX been the only 2 indices that have really found a consistent traction to the upside. Well, that's changed. We have the Russell on fire, the New York Composite is on fire, the Dow is on fire. Actually, the SPX closed a new all-time high. So ironically, the laggard at the moment is the NDX, but I don't think there's a long-term pop in the NDX either. I just think this is a more rotational broadening out of the market, which bodes well for this market. And to me, it signals that this market has many, many, many more months to run. Now, in case you think and I hate this term, for those of you that follow my work, overbought and oversold, because there's no such thing. So if you're thinking about selling this because we're up 12% in 2 weeks, I will direct your attention over here to the low off of 2020. And then in particular, we've had several runs, and the Russell is known for trending. I mean, this thing could just be getting started. We're not that far now from a new all-time high in the Russell. That would be quite an event. That would be a very, very important event. So we're about 8.5% from a new all-time high in the Russell. The price action alone here, the conviction of this price action alone is very bullish. All right, let's look at since the transports have come alive here, a lot of people have been talking about non-confirmation with the transports and Dow theory and all this. Well, the transports have come to life. New York Composite, every stock listed in the New York Stock Exchange New all-time high, certainly strong. The Dow, new all-time high. This is the NASDAQ composite. This would be a new week. If we close here, this would be another new weekly all-time high. Now it's lagging a little bit, but emphasis on a little bit. This is the equal weight S&P, new all-time high. So everything is in sync now to the upside. This is really important. It's very significant. And I realize we could have a 2, 3, 4, 5, 6% retracement at any time. Now, I don't really think that's going to happen imminently, and I'll show you why in just a minute. But this is actually what we're seeing now is very bullish, intermediate to long term. Now let's take a look at a breadth, and what you see here. This is the SPX. This is the red line is a 10-day moving average of NYSE advancing issues. The green is a 5-day moving average of NYSE advancing issues, and then the histogram is breadth. Breadth has now been positive 5 consecutive days. This is the longest streak we've seen since really the bottom back in November 2023. The 5-day moving average is the highest level it's been since back in November 2023. And the 10-day moving average of NYSE advancing issues is the highest it's been since way back in July of 2023. So it's all systems on go here, notwithstanding any short-term retracement in the indices. But everybody has been concerned and hand-wringing over the divergences among and between the indices and the fact that breadth really hadn't broadened out. Well, all that has come to pass now. So at some point, inevitably, we'll get some sort of retracement bigger than anything that we've seen for several weeks, but it's not on the horizon at the moment. And I'll leave you with another thought here. This is a 30-minute chart of the SPX, and below here we have a 30-minute chart of breadth. Starting to see a little bit of divergence at the higher highs, and in particular, we were to put the Russell here. So we may be close to at least a momentum peak here in these indices. Okay, I'll take that call later. So, but breadth has been positive now for the past 5 or 6 trading days, as I pointed out earlier on the histogram. This is the very healthy expansion. So at some point we'll get divergences in breadth. We'll have some sort of 1, 2, 3% retracement, but that should be bought at this point. The important levels to the downside in this market are posted in last weekend's report. Those levels are still relevant if you want to go take a look. So again, please sign up for the free webinar that Ben and I are going to be doing this Thursday at 7 p.m. If you sign up for it, if you can't make it, sign up for it, and I'll send you the link anyway. And we'll see what has happened in the next 2 days. We'll have the opportunity to see that trade activity then. And we'll be talking more about stock market and trading in general. You guys have a great evening, and I look forward to seeing you soon.